last discussion, Patrick, is lagging data versus leading indicators. Now, we often show charts on this show. We often show charts and what's behind the curtain. A lot of stuff we do, Patrick, we show charts, we show numbers. Maybe explain how that is always, to some extent, has some lagging data component to it, because we only get the data when we get the data. And then we'll kind of bridge that conversation into leading indicators.
Well, it is, the lagging indicators that we get. So for GDP growth is always lagging because we don't know what the productivity is going to be in any given region or in the overall country until later. So they usually release it quarterly, then they revise it. But so that is the case for employment or unemployment, GDP growth, population growth, all of those things. But when we look at that, we know this is that when we start to see a rapidly declining, and not even rapidly, if we start to see a decrease, for example, in employment, so that we start to see unemployment rise, we start to break that 6.5 mark, we start to look at it. We know that a lot of these things, as much as the data is lagging, so too is the impact. So in other words, we have to look 12, 18 months, even 2 years out. So it's like right now we're not feeling the impact of the increase in interest rates, but we know that given another 12, 18 months, 2 years, we're going to see the impact of those rates as people come, as their mortgages kind of mature beyond that 5-year hold that they had in those lower rates. And so there's a lot of things. That's just one example. And if unemployment was to start to spike, we don't start to see it until and feel the effects of it for at least 12 to 18 months. So as much as the data is lagging, so too is the impact of that data.
Yeah, that's really interesting, and such a key component to doing proper research, Patrick, is this lagging versus leading indicators. And we are introducing a new system called the DI Vault. DI stands for Deal Intelligence, and this new DI Vault, Patrick, provides us with up to the minute statistics. Number one, I'm going to show a couple examples here in a second, but not only up to the minute statistics, because we can see where the lagging data stops and where our data continues, we can actually predict the future. We can see where prices are going and where inventory is going. We can see all this stuff. It's actually quite fascinating when you apply machine learning and artificial intelligence to some of these charts. You can really start to get some very, very accurate price predictions. And as a real estate investor, any real estate investor that has this tool, I mean, my gosh, what an advantage to be able to see what's coming. And I'll give you a perfect example. I pulled up Hamilton here, and I pulled up a chart, and you could see that based on the May data, Hamilton was in a seller's market. Okay, Hamilton was in a seller's market. Well, I can see, because I can see up to the minute right till the end of June, I can see that in June we went from a seller's market to a balanced market. And that's how fast it happened. 1 month, just like that. You won't see that in the data until at least late July, if not August, by the time you get the lagging data. So I, as an investor, have a pretty kick-ass advantage right now, where I can actually, I'm ahead of everybody else that doesn't have this tool by 4, 6, 8 weeks. And I think that's a massive opportunity, Patrick. And you can see, I'm showing another graph here. You could really see how the sales volume since the June 7th interest rate hike, the sales volume has come down quite significantly. You can also see the listing volume has gone up quite a bit. And this has all happened since June. You can't see any of that in the May data. You can't see it. So the March, April, May data looks like the market's just going to continue to go straight up in Hamilton. But in fact, our leading indicators show that it's actually crested in late May, and it's now on its way down. Nobody else can see that, Patrick. Fascinating stuff.
Well, I think it speaks to what we talked about at our recent Accelerate Summit, Real Estate Summit, which is that, we are entering a new era. And part of what we embrace is technology. That's a leading indicator. If you start to look at where technology is going, we talked a lot about AI, but when you look at technology overall, the way we communicate, we continue to say, it shrunk the world. So when we look into the future and we extrapolate on that, DI Vault is an absolute no-brainer in terms of where things are going. You want to stay ahead of that curve, you have to embrace this new era of technology, where real estate is going, and it's just in its infancy. So, we really got clear on that at that particular event. And as much as we demonstrated to those who were there, you really start to see that this is in its infancy and is accelerating. And just the tool as it is today is so powerful. And, that's why we're excited about it. And, to your point, JG, it's going to change the game for investors in terms of how they get data and the quality of data and the speed of which they get that data so that they can make great decisions on their investment strategies.
All of the data is right there at their fingertips in real time. One source on one screen. It's incredible. And I pulled up another chart just for fun. And folks, we'll give a lot more details about this probably in the next couple of weeks. We're actually doing some preview events and some introductory events. We'll put the link in the description. You'll want to sign up for that and come and see the system in action, if you will. Patrick, got some fantastic rental data as well. And that's something that real estate investors absolutely need in order to make real estate investing decision is, okay, I understand where the price is and where the price is going. I understand the price action of real estate, but where are the rents? Where are they right now? Where did they come from and where are they going? And we got some incredible rental statistics that show you, and we can separate this between 2-bedroom apartments and 3-bedroom apartments and upper units and lower units. It's absolutely splendid what this system can do. And it really arms those investors with that information at their fingertips in real time so they can make better investing decisions.
Well, I think it's so imperative to have accuracy of rental data. You know it, I know it. It's probably one of the most difficult things to do. Go on Kijiji, go on, whatever other sites there are, rental sites, and try and draw comparatives and try and say, well, what is the average rents? And we're making these decisions. We're kind of, okay, well, let's trust the realtor. Oh, let's phone a property management company. So we're having to gathering data. And imagine the other side of that, which is the time it takes to even gather that data. And we're literally doing it at a click and getting it very accurate. And we've back-checked and fact-checked the quality of the rents that are being given. And they're very, very close. And I think that, again, is just another thing that shows technology is going to change the game for investors.
In fact, I would say not only is it very, very close, Patrick, it's more accurate than the average individual can find on their own. And the reason for that is because, and on that last chart you saw, you could actually see the distribution of rent. So you can see, okay, the average rent for a 2-bedroom in Peterborough, let's just say, is $1,950. But you could actually see, the luxury ones are actually getting $2,200, $2,300. So based on what you see and what you have in your particular apartment, you can push the market one way or the other. Looking at just averages and medians are just not just the way to go. And someone asked me recently, this was just a couple hours ago, they said, how much time do you think this system is going to save a real estate investor? And I said, I'm thinking that it's going to save the average investor somewhere between 15 to 20 hours of work per property they investigate.
I gotta get me one of those.
And the average investor can easily investigate 5, 10, 15 properties in a month, 2 months, 3 months. I mean, the hours of time saved here, Patrick, are monumental.
Well, DI Vault is going to be really a game changer for investors. And then let's not step over the fact that you're going to get all this information. You're going to have the confidence on the date based on the data that you receive because it's awesome. It's accurate data. You're going to be able to make decisions. And most importantly, you're going to be able to write and submit a conditional offer. And I mean, just think about the hours saved in that process.
It's amazing. Leading indicators are so important, and it truly is the most important part of knowing where the real estate market is going. Patrick, you've been saying it for 30 years. So has the Real Estate Investment Network. It's not about where the market has been. It's about where it's going. And never before have real estate investors been better equipped and better have better tools to be able to see exactly where it's heading. And that's thanks to technology. And you're going to hear about it first at the DI Vault. So check out that link below, folks, and get signed up. Come to that event so you can see the system in action.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.